Hello, everybody. Welcome back to AGX Media. Today, joining me is Bill Baruch, president of Blue Line Futures, and he's here today to join us in discussing the economy under a new president. Bill, thank you for joining us.
Thanks for having me on today.
Absolutely, my pleasure. And as always, to our audience, if this is your first time joining us and you like what you hear today, please go ahead and subscribe to that channel. Every like, every message, every follow that you guys give us really helps us get the message out there. So, Bill, let's dive right into it. With President Biden now at the helm, what changes?
Well, at least on the monetary policy front, I mean, the policy is going to remain very loose. We're going to see zero interest rate policy continue for a bit. We look to next week, a Fed meeting. We'll hear a little more on that. On the fiscal front, we've already seen the new administration push the $1.9 trillion spending package. See how quickly that gets through Congress, and we're continuing to see some of the tailwinds that finished last year. I think the more important thing too is what is the market already priced in, and what are its expectations, and that's really how we can make money in the market. But I do imagine, again, more of a fiscal driven spending program coming from the administration. This 1.9 trillion maybe probably not being the only one, and then. For the metals, I think the climate change narrative, what they're going to push is they see these rare earths really can be driven higher by a lot of the initiatives we see out of the new administration. I think silver and platinum would really potentially outperform gold amid that narrative. So that's something we're really keeping a close eye on and invested in.
So in your opinion, then, what you're saying is that you believe this administrating sort of advocacy for a Green New Deal will have a positive impact on the metal, despite the fact that it would be used industrially.
Yeah, absolutely. I think that's something where silver and platinum will outperform gold, and then you kind of tie in all this spending. Interest rates, they're going to remain low, but the more spending, it's going to drive interest rates higher. So you're going to be a little bit of push and pull on either side there, and that could hold gold back at times. So that's why we do think silver and platinum are going to outperform gold at least over the next 6 to 12 months through 2021.
Absolutely. Makes perfect sense to me. Now, at large, what sectors are looking the most interesting or the best to you right now?
Well, I do love the metals, and I think that as we've seen a little bit of sell-off to start the year, we started very hot, but they've come in to start the year a bit. The more precious metals, gold and silver. Platinum here on Thursday had set a new swing high. So I think overall, I really think the metals is a great place to be. And whether I'm trading on the futures side or trading, managing portfolios as an investment advisor, I have exposure in the metals. I think the equity markets, this wave we expected to see some very solid strength coming out of the election, and really our narrative through that was it doesn't matter who wins. It's going to be less uncertainties on the table, and the equity market is going to capitalize, and that's what we've seen. I think we're going to start to see potential, just a little exhaustion through February, March, as we have priced in perfection. We get through earnings and then kind of see from there, but. I don't see a large correction for any reason. I think any correction in the equity markets should be a buying opportunity. And then as we're moving through the middle part of this week, we're seeing some correction in the cryptos and Bitcoin and Ethereum in most particular. I think there's gonna be great buying opportunities as they pull back. Very much in the headlines right now. So when we start to see too much discussion, usually things start to pull back a little bit. So I think there's gonna be great buying opportunities for those as well this year.
Absolutely. I mean, Ethereum just recently hit new all-time highs. But with that being said, let's go back to the metals there for a second and actually cryptocurrencies as well. Do you see a correlation between the incredible highs that we're seeing within the cryptocurrency market right now and perhaps some of the sell-offs that we've seen in the metals market?
Listen, there's something you don't want to ignore there. And something too, I follow the commitment of traders, and that tells me, it helps me, my strategy. It's just one component I bring into my strategy, and it tells me, where is the managed money? The managed money is what I look most closely at in the commitment of traders. And those are all CME products. And that's managed money is really the speculators, the funds, people that are out there, theoretically weaker hands, potentially FOMO, chasing the market at times too. So when the managed money is very net long, in my mind, everybody's already bought. And then when the managed money, who else is left to buy, and managed money is very short, then who's left to sell. So usually those can bring tops and bottoms. One thing I've noticed as really kind of digesting the commitment of traders over recent months is we've seen open interest in gold is much lower than we've seen in the past. So even when gold set its new record high in August, the open interest, the managed money net long, you would imagine would be just overloaded to the long side, and it really wasn't even a record long. And that's because the open interest is less. Now, there are micro contracts and things that help people more cater to the exposure they want. And that's taken away a little bit because not everybody needs that big contract size. But you can see in the open interest that it's not what it once was. Now, for a number of reasons out there, I think, like I said, the different types of contracts out there. But listen, you can't ignore the fact that what Bitcoin has done in the last 6 months and how it's stolen some attention from gold. And people are diversifying away from gold. So I do believe it is stealing the attention from gold.
Fantastic. I love the insight there. Appreciate it. Do you have any recommendations for individuals in our audience here about how they should manage their portfolios given in this information?
Well, I do think a diversified portfolio is really the only way to go. And I think a lot of people, as they look at things and they break things down, people, as I've talked to more individuals, they either really think they need to be all in on stocks or all in on something, and that they can't go half in and have money in cash and on the sidelines. I think an overall diversified portfolio. So really on the future side, we're doing a number of things that we manage and we work with clients on, and we never over leverage. But when we get to the investment advisor side and the stocks and equities, I do think, and I keep anywhere between 5 to 10% in every portfolio exposure in the metals, whether it be through miners, through with gold or silver and platinum and palladium. I think that exposure needs to be there. And then I think as well that similarly, some exposure in Bitcoin, but you got to be comfortable with what you're doing. And the reason why it's very important to be comfortable is because you get these violent swings, you don't want to be shaken out. And you also want to understand what you own. And it's very important to understand what you own, because if you don't, then you're going to be scared when those violent swings happen. So I do think exposure in the crypto market, most importantly, Bitcoin and Ethereum. Obviously, there could be other winners out there, but for viewers who are sort of new to the space, again, use what's out there. And one of the things that we've put out too is a booklet talking about revisiting investing in Bitcoin. And a lot of people sort of, threw it on the wayside through last year, and now we're waking up to it again. So we put together a booklet. You can find it at bluelineFutures.com/Bitcoin. And it's a nice 15-page booklet talking about the macro backdrop, comparing, the stages that it's been going through since 2017 to right now, or even really earlier than that. But how people can invest in it, and the different types of coins that are out there, and how comparing the market cap size. So it really breaks it down. And again, that's at bluelineFutures.com/Bitcoin. And that booklet we think would be very helpful for people.
Absolutely. We'll make sure to post in the body text of our video after we're done recording the interview. Thank you so much for joining us today, Bill. I have one more question for you, and it kind of goes back to the politics a little bit here. But how much influence will Janet Yellen as the Treasury Secretary have on the Fed, do you think?
I do think part of the reaction we've seen in equity markets and that we're enjoying here in equity markets is certainties. And I used that terminology earlier in the interview is when we moved through the election, there was less uncertainties in the market. The stock market liked it. I think right now the fact that she's been in the Fed and a lot of people and traders, investors, banks, the people that are moving the markets and those that need to feel comfortable with the markets feel that there are more certainties because they know the policy direction she's going to take, and so I think we're seeing sort of a soothing in the market. The markets use that to go higher. Equities. One question that is remained to be seen is what's going to be their dollar policy. We know the previous administration worked to weaken the dollar, especially during the pandemic, and the Fed was on board with that. Earlier this week, Janet Yellen, when she was doing congressional testimony, had mentioned that they're not going to just go weaken the dollar. It's not going to be a backbone of their policy. So very curious what the dollar does from here. I do think the dollar goes lower. But it's what's the pace of going lower. And as the dollar goes lower, that's what's going to fuel the metals. That's what's going to fuel things like the Bitcoin and equity markets, because we do believe that the dollar was the sacrificial lamb for the global economy last year. And that's why all these assets have been able to rise. So if the dollar continues to weaken, they'll continue to rise. So if you get the dollar right, you'll get a lot of things right. And that's what we got to see here. And as we look to the Fed meeting next week, and curious to see, if any comments about her in the press conference afterwards. But for now, I think there's more certainties with her at the helm in the Treasury. And I think that's good for markets.
Absolutely. Once again, Bill, thank you so much for joining us, and take care.
Thank you.
That's all we have for today's episode. Hopefully you enjoyed what you saw today. And if this is your first time, please go ahead and subscribe to our channel and check out agxpay.com to learn how the power of modern silver money can help you guys claim financial freedom. Take care.